All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Waves Weekly, a series I post every weekend where we cover recent news and current events that I believe relate to the markets. These episodes are meant to be more chill, so sit back, grab yourself a drink. Right now, I am personally drinking blood orange flavored Runa. This is Guayusa tea, clean energy, 10 calories per can, low sugar. This stuff is the goods. Solid 8.2 out of 10. So cheers to the weekend, you guys. I hope it is relaxing yet productive. Let's get into it. Pinkies up, always. All right, as always, we'll go over each topic that we're going to be discussing, and then we'll dive into each one individually. First things first, we're going to be covering Airbnb. This is probably the most anticipated IPO of the year, arguably. First article titled, Airbnb tops $100 billion on the first day of trading, reviving talk of a bubble. So, of course, as much as the Airbnb IPO is being talked about, the talks of a bubble, the Mania, the 1999-2000 .com bubble are rebirthing, are coming alive with this new season of IPOs, IPO Mania of 2020. So we will talk about this, of course, go over the Airbnb IPO quickly, but I actually want to spend more time going over this second article titled, Cramer calls IPO pricing broken and embarrassing after Airbnb DoorDash debuts skyrocket. So, you guys, like him or hate him, Cramer, I could not agree more with him on this, and it's very important. The reason I want to share with you guys this article is because although Cramer does seem like kind of a kook sometimes, I trust me, you guys, I disagree with many things he says, but this topic I agree with him on 100%. He's a veteran of the game, you guys. It's very important to understand that if you guys do think he's a goof, and he knows, he understands the dynamics. He understands the financials involved with IPOs, and that's what's very important to understand is why these IPOs are broken when they double, when they go up 100% in a single day. That means the bankers, the investment bankers who set the price for those IPOs are fools and did them completely wrong and lost the companies a lot of money. This can be good for the traders, anyone making money, like scalping these stocks on these crazy opening days, but it's bad for the companies, and that's important to understand. It's important to understand the dynamic around IPOs from a financial perspective and understand why this is bubbly and why this is a mania, okay? So we will spend some time looking over this. Probably the majority. This is a pretty long article, but again, I feel like it's important for you guys to know, and I was very intrigued by this article as well personally, so I wanted to share it with you guys. Moving on, after that, we'll just close out the IPO talk by quickly looking at Airbnb and DoorDash's comical charts. There's really not much to look at here, you guys. It's pretty much just for fun, but we'll take a look at it. I'll let you guys know what I'm thinking and when I think when I'd be considering a trade personally, or when I'd consider taking on a trade, exactly. So we will talk about that. Moving on, the only other, again, you guys, this is very IPO focused just because this was such big news this week. We, of course, do have to follow up on the stimulus. Stimulus still, in my opinion, is the most important catalyst once passed in terms of a continuation of the rally in not only the equity markets, but Bitcoin, gold, silver, literally every asset aside from the US dollar. So stimulus is important not only for the markets, but for a lot of people who really need it during the holidays. Again, Americans don't get Christmas. That's civil war. That's when civil war breaks out, is when Americans don't get Christmas. So I really hope for a successful and finalized stimulus in the near future, not only, again, for the markets, for you guys, for us, for fellow traders, but for the people who really need it and need to buy Christmas presents for their loved ones and stuff. Okay, so we will go over this to finalize that. Yeah, let's dive straight in. Again, you guys, pretty quick one. Just keeping it brief. This is going to be the last Waves Weekly, just for a week. I'm going to be gone for 10 days up in Big Bear once again. So if you do want daily updates from me every trading day, want to know what I'm trading, please check out my daily newsletter and complete portfolio, first link in the description, if you want to keep up with what's going on over the next 10 days. If not, though, no worries at all. Let's get straight into this. One more thing. Please give the video a like if you go on to gain value from it, and subscribe to the channel if you're new around here, want to catch more content like this. Okay, boom. First article, the home rental company's blockbuster IPO followed that of the delivery company DoorDash. Investors piled into both. Which is, again, you guys, I think everyone was kind of expecting this. These are the most hyped IPOs probably of the year once again. Over the last decade, Airbnb has upended the travel industry, riled regulators, frustrated local communities, and created a mini economy of short-term rental operators, all while spinning a warm narrative of belonging and connection. It's a beautiful way to describe Airbnb. It's well written by Aaron Griffith. On Thursday, Airbnb sold investors on an unlikelier story. that the pandemic is a winner. And that's what's crazy, you guys, is when you dive into Airbnb's financials, it's actually super impressive that they maintained profitability and they weren't like significantly down on revenue like this over these past few quarters, which is insane. The company's shares skyrocketed on their first day of trading, rising 113% above the IPO price of $68 to close at $144.71. That put Airbnb's market cap at $100.7 billion, the largest in its generation of unicorn companies and more than Expedia Group and Marriott International combined. Airbnb's offering raised $3.5 billion, making it its IPO the biggest this year. So, again, you guys, although it seems awesome that Airbnb raised $3.5 billion for this IPO, and that's a good base case to make right here for an IPO. The reason companies go public is because they want liquidity. They want money. They offer shares of their company. They offer a stake in their company for liquid cash in US dollars, okay? And that's why companies go public. And although 3.5 billion may seem like an impressive, and it's great for Airbnb to have that amount of cash on hand, they still lowballed it so heavily because, again, the stock rose 100% in the day, and we'll go into why that is specifically in this next article. This is interesting right here. We will move right into that next one, but you can see here it's very interesting. Let's see if we can, no, never mind. But it's Sequoia Capital, you guys. If you're interested in venture capital, I'm very interested in venture capital personally. Sequoia is an absolute titan, you guys. Like, if you think SoftBank's good, you think ARK Invest is good. Like, Sequoia has just been so freaking consistent for so many years, and I'm happy for them. They own $11.4 billion of shares when Airbnb IPO'd. So again, you guys, this is more just goals. I just wanted to show you guys this for goals. Of course, the co-founder and CEO Brian Chesky made about 10 bill. The other founding members of Airbnb deserve to be compensated because they've created such a great product. I think Airbnb is an amazing product. I've used it many times in the past, plan to use it many times in the future. So they deserve to be compensated. But just again, just some motivation for all of us investors out there. This is what you're going for. You want those venture investments. So as you evolve through your career in trading, always be looking to scale, looking for those, because again, they probably ought to be surprised if they 40x, 50x this investment. And that's the end game, guys, is 40 to 50x investments. Okay, so shout out to Sequoia. Let's move on to this. So again, Cramer calls IPO pricing broken and embarrassing. Key points: CNBC's Jim Cramer criticized investment banks for their handling of recent IPOs from Airbnb and DoorDash. Both companies saw massive jumps in their stock prices during their first days of trading. I quote, "I don't want to say the market is broken, but the process of how we're doing these deals is definitely broken," Cramer said. Okay, moving on. CNBC's Jim Cramer on Friday sharply criticized how investment bankers handled the recent initial public offerings for companies such as DoorDash and Airbnb, two tech companies that saw major pops in their stocks after they began trading this week. I quote, "I don't want to say that the market is broken, but the process of how we're doing these deals is definitely broken," Cramer said. Food delivery app DoorDash closed higher by more than 85% in its market debut Wednesday, while home rental company Airbnb ended its first day of trading on Thursday at more than 112%. Those massive first day moves, which left so much money on the table, are not the fault of the companies, Cramer said. Instead, he said it was embarrassing work being done by the financial firms that work on the IPOs. They ought to start focusing on how to do it better. While big market debuts are great for shareholders, they're not so great for the companies. Case in point, Airbnb, which could have raised over double the money on its IPO, priced shares at $68 each for $3.5 billion haul. Again, because it doubled in price in a single day, that means Airbnb, if the bankers did their job right, which is crazy how these guys take a cut of this too. Like, these guys suck at their job, and they're still getting heavily compensated. Investment bankers are so whack, to be honest. So shout out to you investment bankers out there. If you're watching, you're cool, but you can leave a dislike if you want. Anyway, $68. If they priced it right, they could have got $7 billion. And again, $3.5 to $7 billion when you're getting that just cash in hand is a huge difference. So again, the investment bankers just flopped. For DoorDash, pricing its IPO at $102 per share raised $3.4 billion. Had the company priced the shares where they closed on their first day, that they could have raised more than $6 billion. Cramer said the recent price action reminds him of the dot-com boom in 1999. Many investing not legends, but just veterans have been saying this, when there were similar levels of interest from retail investors and soon-to-be public companies. This is what happened in 99, where the syndicate desk completely misjudged the public, and the public is back, and they're pricing deals as if the public isn't back, and it's just same old funds buying stock. This new cohort, and it's not just Robinhood, but it's the public, has not been factored in, so everybody keeps blowing it. And this is important, you guys. This is, shout out to all the Robinhood traders out there. I'm a Robinhood trader myself. There's a new wave. There's a completely new wave of traders out there, and that makes this market environment completely different. This entire mania, this entire market rally since the March lows has been for the first time in a very long time primarily retail driven, which is insane to think about. But it shows you the power of the retail Joes, of the Robinhood traders. I think there's money that basically says, we don't really care what the opening price is going to be, Cramer said. Then there's not going to be a lot of discipline in a lot of these market buyers. They're not going to put a price limit on it. So again, you guys, this is hype. Like, owning Airbnb is a flex now. It's a vanity metric almost. Like, I got Airbnb stock. I got DoorDash stock on the IPO. It's becoming a flex. And when things become a flex, that's when it's sketch. Okay, I wish that rhymed. That almost rhymed. But when things become vanity metrics, I own Airbnb. I own X stock. Tesla. Tesla is a great example of that. It's almost as cool to own Tesla stock as it is to own a Tesla, which is whack in my opinion. Okay, it's cool. Again, financial literacy is awesome, but when you get to those levels of hype, just purely hype, that's when it gets whack. Okay, so they're not putting a price on it, which is why you see these stocks just double in a day, is because there's so much hype around them. There's so much hype. People want these shiny objects in their portfolio that the price doesn't matter. The price doesn't matter, and everyone just wants a piece of it. There was, in fact, notable millennial interest in DoorDash and Airbnb on their first days of trading, according to TD Ameritrade's chief strategist, JJ Kinahan. In a Squawk Box interview on Friday, Kinahan said about 41% of DoorDash's trades on his brokerage platform were from millennial clients, while for Airbnb it was about 45%. So again, this is the hype boys. This is the hype team. I personally don't. Again, if you guys traded it, it's like nothing against you. I get it. I was considering maybe trying to trade it. No, I wasn't. I'm not gonna lie. I was not considering trading it. I'll trade Airbnb and DoorDash in 2 weeks, because that's usually 2 to 3 weeks is usually the main. Where like, I'm gonna talk about this in a video I'm actually gonna post while I'm up in Cali that I just pre-recorded. Hype cycles usually last about 2 to 3 weeks. That's just, again, because I've played a lot of bubbles over my day. That's just kind of the general rule of thumb I have for how long a hype cycle lasts. So from its IPO date just earlier this week, look 2 to 3 weeks out. While the market cools down, a lot of the hype is faded away. That's a good time to start thinking about maybe accumulating a position, or if it continues to inflate, maybe short the stock. So again, I'll keep you guys posted on that portfolio group. Of course, you guys are going to be posted on that. But it's going to be very interesting to watch these. And you guys keep in mind, just watch these for research, for R&D. Like, you guys want to know what these absolute hype stocks do, largest IPOs, these unicorn IPOs do, and how they act. So you can use that knowledge in the future to, maybe trade future large IPOs if you choose to do that. So we'll take a look at this quick, just because it's so funny. So Airbnb, again, it IPO'd, where is it? $68? So $68 is like, it's just like, you have to go like this. It's just pretty much a straight line. Like, all that volatility, just a straight line when you go down to $68. So I'm just kidding. We didn't have to go that far out, but $68 is like right here. So we gapped up immediately. Huge volume, again, because everyone put in those buy orders. Everyone put in buy orders for $400. Immediately, every share of Airbnb was sucked up, and it doubled in price. Because again, everyone set their buy orders for no limit, for market order. They didn't make a limit orders, they made market orders. And that's what sent the stock up to a high of $170 and $100 billion market cap. And immediately, everyone who got the stock for $143 and it went up to $164 immediately sold off, because they knew there was no way it was going to continue to go up. Went on to capitulate. Again, you see, like, this is just all day traders. This is all day traders right here, just all this volume right here. And again, ultimately closed Friday out at about $140, reaching a low of $135 with a market cap of about $78 billion. So again, you guys, Airbnb is an amazing company. I love Airbnb as a company. I think they have a very bright future ahead of them, especially considering, once again, I said revenue earlier, but I meant profits when they were talking about their quarterly estimates. And revenue obviously was down, but profits which is the more important thing when you're judging a company's financials, weren't significantly down. So they obviously have a great team. They have a great financial team behind them who was able to navigate probably the bloodiest waters you could possibly navigate with this COVID pandemic and just complete lockdown. When their company is like the epitome of a company that thrives during not lockdowns, during regular times. So very impressive that they were able to navigate this and maintain profitability. And I think they're just going to continue to expand their company. I think Airbnb one day could be I think a $100 billion valuation is justifiable over the coming years. But definitely not right now. For sure not right now. That's insane. Okay, so it just shows, again, you guys, mania and hype. This is what mania and hype looks like. So DoorDash, again, IPO'd at what price did DoorDash IPO at? DoorDash IPO'd at DoorDash pricing is IPO'd at $102 per share. So Dash went up to a high of $195. So it almost 2x'd, $102 per share. So IPO'd, again, you guys, you have to go all the way. The volume just what looks like volatility is just not volatility when you compare it to its IPO price. So IPO, again, around $100 here. Same exact thing happened. No limit orders, all market orders, and it just bought up, immediately sold off. And then day traders, literally this is all day traders right here because day traders love themselves some IPOs and some high volume. So again, that's it, you guys, just for fun. I'll keep you guys posted on when I manage, again, 2 to 3 weeks from now, look for some Airbnb and DoorDash analysis videos. Finishing it off. Congress paralyzed on a stimulus deal, gives itself another week or two to strike. To strike one. The Senate cleared a week-long stopgap spending bill to buy time for an elusive pandemic bill, but negotiators remained short on an agreement. Oh man, been reading a lot, you guys. I'm stumbling a little bit. Sorry about that. After months of fruitless haggling and a frenzied few days of revived talks, Congress missed yet another deadline on Friday to deliver an economic stimulus package to help struggling Americans weather the pandemic, instead agreeing to extend government funding for an additional week as leaders continue to search for a deal. This is so irritating. This is what they've been doing for the past 2 months. Get a deal done. Sign the check, get another one done later. Just get one done now, give people Christmas, and get another one done after the new year, okay? It's so irritating. The Senate approved a 1-week stopgap bill to keep federal spending flowing until next Friday, where they'll probably do it again, securing additional time for negotiators to hammer out both a catch-all spending package and elusive coronavirus aid compromise that has divided them since summertime. Leaders have said they plan to merge the two packages should agreement be reached. While President Trump signed the temporary funding bill and kept the government from shutting down, it remained unclear whether 7 days would be enough for lawmakers to complete the dozen must-pass annual spending bills and break through their impasse over providing relief to millions of Americans, small businesses, and schools, and funding efforts to distribute a vaccine. Again, you guys, this is again, we're in a very fortunate place where we're involved in the markets and stimulus helps the economy. So the stimulus, the money printing is... retail traders aside, retail interest aside, is ultimately what was the catalyst for this rally in the markets, the reason we're at all-time highs in the S&P, Dow, NASDAQ, why Bitcoin's at all-time highs, why gold is at all-time highs. It's the money printing. The more the dollar is devalued, the more any asset that isn't the dollar goes up, and that is inflation. That's what inflation is, and that's very apparent in the markets right now. Time is waning for lawmakers to resolve policy divisions with a number of government programs and policies that are helping insulate millions of Americans from the economic consequences of the pandemic set to expire in the coming weeks. An estimated 12 million workers could lose jobless benefits when 2 federal programs that expand and extend the unemployment insurance system expire this month, and a federal moratorium on evictions lapsed on December 31st without administrative action. So again, you guys, we're in the markets. We want money. I'm sorry to any of you guys who may be catching unemployment. I have a lot of friends, a lot of people close to me that are catching this unemployment. That hurts, and I'm doing my best to help them out because I'm very fortunate to be in a place where I'm just financially comfortable. So I'm trying to help my loved ones out as much as possible who are seeing a hard time. But it just pisses me off that these guys in their ivory towers, I know there's the majority of them are good people, but these guys in their ivory towers just keep pushing it and just just take action, make waves. That's the motto on this channel. And if I could tell them to do something, it'd be take action and make waves, because we need this money. People who need this money for Christmas, and I really hope it comes, not only for the markets, but for the people who need it. So we'll close it out there, you guys. Remember, holiday season, just to be thankful, be kind to everyone around you, be kind to your loved ones, and yeah, I'll be gone for 10 days and I'll miss you guys. But again, if you're part of the newsletter fam, I'll talk to you soon. You guys always have direct access to me through those newsletters. So if you guys really want to ask me some questions, you want to talk it all through these next couple weeks, of course, I'm looking forward to that. But if you guys want to drop some comments down below, I will be keeping up with comments. I'm not going to be recording any videos, taking some time off. But of course, the newsletter will still be alive and I will still be reading comments, going through YouTube videos. Again, I do have some pre-recorded videos that I'm very proud of. I hope you guys do like those. So stay tuned for those. And until next time, guys, always remember, take action, make waves. Peace.